Now I'd like to introduce Mr. Stephen Wetherall, Managing Director and CEO of Lucapa Diamond Company. His presentation today will be on a rare diamond company. Obviously, Lucapa operates in Angola, but I'll let Stephen fill you in on that. So let's welcome Stephen Wetherall.
Thanks, Peter. Good morning, Honourable Ministers, distinguished guests, ladies and gentlemen, all protocol observed. I'd like to thank you for giving your time this morning, and also thanks to Bill Rappard and his Pay Dirt Media team for putting on another wonderful event. I'd first like to start by welcoming our government partners to Perth. The governments of Angola, who through Indiama are our partners in the Lulo project, are here today. They are led by Dr. Victor, who's the State Secretary for Geology and Mines. He's accompanied by his fellow board members from the Ministry, as well as Indiama and Sodium. A warm welcome to a fresh Perth. The government of Lesotho are meant to be here today. They're our partners in Mothae in Lesotho. Unfortunately, the Honourable Minister has been delayed in his travels and will be arriving later, but I extend a warm welcome to him in his absence as well. We may have seen many of you yesterday and some this morning at our booth, but for those of you who haven't seen Lucapa or heard of Lucapa, let me introduce you to a rare diamond company. Just the usual cautionary statements that I urge you to read in your own time. To aid that, we've got presentations available at our booth or on our website and the ASX platform as well. Before I begin, corporate snapshot. Lucapa is a growing diamond producer and explorer. We're listed on the Australian Stock Exchange with a secondary listing in Frankfurt. At time of printing this presentation, we were trading at 16 cents, which gives us a market capitalization of just shy of $80 million. At last reporting period, Lucapa had a healthy cash balance of just over 5 million, and as you can see, our operations held very healthy diamond inventories as well. Just to give you an example of what those diamond inventories are worth, those 7,000 carats there form part of the 7,900 carats that were sold across the two operations and achieved 8.8 million Australian dollars. So you can see very regular producers of revenue. The debt of just over $14 million in our balance sheet relates to the Mothae project. We secured the financing to develop that, and we have brought that mine into production in 2019 as well. Our two largest shareholders, Ross Stanley and Simon Lee, through Tasga 2 and Equigold respectively. Our register has changed considerably in recent years. It was not that long ago that the top 40 shareholders spoke for a little over 20% of our company. Today, the top 40 shareholders speak for over 50% of our company. So you can see strong support building on our register, and I think that is very reflective of the maturing of our company as a meaningful producer in the diamond space. You can also see there that our 52-week share price is a range of 14 cents to 27 cents, and I hope that, like me, once I finish this presentation, you'll see that we're trading at the wrong end of that range and then some. So why is Lucapa a rare diamond company? Well, firstly, we are one of those rare diamond explorers in Australia that have successfully transitioned from a pure exploration company into a meaningful producer. The second reason is that we mine exceptional rare product, large and high-value diamonds. The third reason is that we don't just mine these diamonds from one operation, we mine these diamonds from two operations. 75% of the value of these mining operations is derived from large Type 2 fancy color diamonds. That allows us to boast across the two operations a dollar per carat of some $1,300 per carat. Now I challenge you all in the room today to go and find another multi-asset diamond company that produces diamonds at that average dollar per carat. You'll excuse me if I don't hold my breath, because I think it might end badly for me. The scarcity of this product allows us to operate in a slightly more robust but not immune diamond pricing environment in what has been quite a challenging market globally for the diamond space in 2019. But having said that, the quality of this production, the quality of the assets, and the quality of the diamond teams that we have in our operations has allowed Lucapa to report a first half profit for 2019, and we're very proud of that. We too are very different. We are eager to grow. If we had just sat in our laurels and expected Lulo to produce in Angola, that would have been our carat production profile that we could have looked forward to. Pretty flat, pretty boring, pretty unattractive to us, to our shareholders, and our project partners as well. So we spent the last couple of years focusing on growth, both organically and acquisitively. Organically, at Lulo, with Indiama and Rosa Patalis, our partners, we are about to deliver a major expansion. That will see production there grow. Acquisitively, in Lesotho, where we have just developed the Mothae diamond mine, we're going to see that production come to the fore as well. So just in the last 2 years, with the decisions that this company has taken, you've seen the carat production profile go from 20,000 carats per annum to 51,000 carats this year to over 60,000 carats in 2020. That is a 200% growth in this company in a short space of time. We're already seeing the impacts of those growth initiatives and the decisions taken. Just last month, August, we've achieved production records at both our operations, and I'll take you through some of that shortly as well. We too are not just focusing on production growth, we're also focusing efforts on value growth as well. Our diamonds are rare, they are very valuable, and we must try and attract as much value from beyond the mine gate as we can. So we have implemented a number of cutting and polishing strategies, and we have also delivered diamonds into those strategies this year as well. Lastly, but not least of all, unlike a number of our producing peers in the diamond space who have no blue sky potential, we have significant blue sky potential. We offer our shareholders exposure to a major source discovery at Lulo, where we and our partners are actively advancing that program. So we have not happened upon this matured state by chance or fortune. It has been a deliberate strategy, meticulously delivered by this team and our partners, and we look forward to the years ahead. Now to our operations. Our high-value diamond mine in Angola, Susaidara Mineira de Lulo, or SML for short, is just one of the most precious mines in our space today. Large, high-value diamonds, which allows it to boast the highest average dollar per carat for any alluvial operation in the world. It has a large 1,500 square kilometer concession that is home to some of the most magnificent stones, which Dr. Victor showed you an example of towards the end of his presentation, and the 411 will be delivered at some stage in the future, I'm sure, Dr. Victor. We are in our 5th year of operation, and we will be there for many more years, as I'll show you shortly. We too have a very, very innovative designed plant where we incorporate X-ray transmissive technology, which I think makes that plant one of the most up-to-date, if not the best, diamond processing plant in Angola. You would have learned a lot more about Angola through Dr. Victor's presentation today, but I will highlight that it is a mineral-rich and underexplored country. The opportunity to invest in Angola is here today. The changes to the mining code and the significant reform that is happening there is not just rhetoric. It is happening, we are feeling it, and I urge you to reach out to the delegation and go and speak to them about the opportunities, no matter what mineral you are invested in. But we are invested in diamonds, and we are fortunate to be part of one of the most prolific concessions in partnership with Indiama and Rosa Patalis, in a partnership that is already a decade old. We have been operating for 4.5 years, as I mentioned earlier, and we are halfway through our 10-year mining license, but this license is renewable to a maximum period of 35 years. So we will be there for many, many years. We operate an ongoing alluvial program. Just this year, we increased our carat resources by some 90%, but we will continue to do that, and I'll show you the examples and results of some of our more later exploration work. So, as you can see there from the slightly colored blocks along the river, we have really touched less than 25% of the Coquilo River, the valley, the tributaries even the river after which our concession is named, the Lulo River. So I'm sure our partners will agree with us that SML will be mining there for many, many, many years to come. Just to give you an example of some of the diamonds that are produced there, the reason why it is so special, it is a consistent producer of large type 2 and fancy color diamonds. 13 plus 100 carat diamonds have been delivered from this project so far, including Angola's largest diamond on record, the 404 carat diamond, which we sold for $16 million US. High proportion of type 2A diamonds that are very rare in our industry and therefore add to the value. This has allowed us to accumulate a revenue of over $150 million in the 4.5 years that we have been there at a staggering $2,000 US per carat. That is best in class in our industry. It too has been a stellar performer operationally. It has recorded year-on-year growth since its inception in 2015. It has reported $11.3 million US in EBITDA for the first 6 months of this year, but it can do more. Our partners, Indiama and Rosas Patalis, have approved an expansion program with ourselves where we will see production grow to some 450,000 cubic meters per annum, or 760,000 tons. That is a 50% increase on the throughput capacity. We'll do so by purchasing earth-moving fleet, which has all arrived on site already, and we'll be implementing a third shift on our plant. The expansion follows on the back of significant reform in Angola that Dr. Victor has alluded to. In our space, in the diamond space, the new marketing regulations have opened up significant channels for producers to start realizing higher values for their production. Tenders, auctions, contract buyers, even cutting and polishing strategies. The average dollar per carat of Angola will increase, and it certainly will attract more investors. The expansion that we have at Lulo certainly will add our weight to trying to increase the production targets that you are trying to reach in 5 years' time. Certainly the expanded production will allow for additional employment, royalties and taxes to be paid, corporate social responsibility investment to be increased, but it will also result in increased returns back to the project shareholders and to Lucapa as a foreign direct investor. Now, some of the new exciting areas that we have identified in our recent exploration work. You may all know about the Mining Block 8 and Mining Block 6, which have been some of SML's most prolific mining blocks. We too have been going into the Lazaria areas or the floodplain areas in between those mining blocks. You can see the red dots on the maps there that identify the auger drilling location, and you can see those red dots are hits on alluvial gravels. Those untested floodplains are significant along the river. This marks the first occasion where we have gone and actively explored them and sampled them. Now, let me just tell you about some of those results. Mining Block 19 and Mining Block 31 have been recovering diamonds at well in excess of 10 carats per 100 cubes. You'll allow me not to state the actual number because we still got to take it through our competent persons and deliver the resource. But those have been recovering special diamonds. And to give you an example of how special, just in July and August alone, we have recovered more special diamonds from those two areas than we did in the entire first 6 months of the year. So very exciting indeed, and we look forward to the next 6 to 12 months as we start to recover through those areas. But one of the other exciting programs on the Lulo concession has to be the kimberlite exploration program. We are searching for a major prize, the source of the exceptional diamonds that we're recovering in our alluvial operations. It is a 3,000 square kilometer concession where we, as I've mentioned, have got the best diamonds in the world. But directly underneath these diamonds lies a significant kimberlite province. These large diamonds with their relative heavy weight showing no signs of transport, irregular shape, have not traveled very far. So the source has to be proximal. So we, with our partners, have developed a methodical program to work through the significant targets that we have on this project. We have just announced our updated program, a 12-month program, that will see us take those high-interest targets and delineate or test them further, but it will also see us do bulk sampling of the tributaries that run away from those targets and into the Coquilo River so we can try and identify which targets have contributed which diamonds to the area. Very exciting program, and we'll bring those results to you as they progress through the 12 months as well. Our second producing asset is the high-value mine in Lesotho, Mothae Diamonds. It too, because of its content of large diamonds, has resulted in it having one of the highest resource average prices in our diamond space. It is an 8.8 hectare pipe that has 1 million carats in an indicated and inferred resource. At our 1.1 million ton per annum processing capacity right now, we should be mining there for in excess of 20 years. It, like Lulo, too, has an innovative design in terms of the XRT components. We have XRT units on both the medium circuits as well as the coarse diamond recovery circuits. For those of you who don't know Lesotho, I do urge you to come and listen to the presentation to be given by the Honourable Minister tomorrow at some stage. I'm not sure when paydirt have managed to fit him in, but certainly he will highlight the opportunities that are in Lesotho as well. But it is a diamond-rich country, and within 20 kilometers of our mine are 3 other very well-known diamond mines. We acquired 70% of the project from the government, who have retained a 30% interest in Mothae. We have invested just shy of $38 million in the project through acquisition, through the bulk sampling programs that we ran, through the infrastructure development, as well as the commissioning and building of the plant, which we have brought into production on the 1st of January this year. So it's been in operation for a little over 8 months. It too is a 10-year mining license with renewable periods for 10 years. To show you what it has been producing, it certainly has been proving its value. In the first 6 months, we've achieved higher than target throughputs, higher than target grades, and higher than target diamond recoveries. We've been recovering very regular large stones, type 2As, and fancy colors, and we have sold that production for $500 odd per carat. We too, because we are operating in the weathered zones right now, as we start migrating further down into the more competent unweathered material, we will recover less and less of the -11 sieve size fraction, which will see our diamond price start edging towards the $1,000 per carat mark. It too, in just its first 6 months of operation, has produced a positive 10 million Malotti EBITDA. Not a very big number if you compare it to what Lulo produced, but it has been a very, very challenging environment in the diamond space. We too have been sourcing a significant proportion of our ore from the lower margin north and neck zones, and I'll tell you why now. We took a decision at the beginning of the year to conserve water. We saw that the capacity of our plant was a lot higher than the 1.1 million ton nameplate capacity. So in order to ensure that we could operate at that higher throughput level, we needed to store more water. So we decided to store that water in the southern pit and source some of our first half material from the neck and north zones. We had to increase the height of the return water dam 4 wall, and we reached the required height in early H2, and we have been mining the material from the south pit in H2, and we will do so for the balance of the year as well. The south lobes are our highest margin zones. We can already see the effects of those high margin zones, which comprise 83% of our resource tons. You can see that we recovered and we reported the 63 carat decolored type 2A diamond that we recovered in August, and we also have reported a record production throughput and carats at Mothae this year. 33% ahead on tons and 63% ahead on carat recoveries as well. So very exciting times at Mothae, and like Lulo, the next 6 months we're expecting a lot of good things. I mentioned earlier that we were looking at accessing additional margins, not just focusing on production. In that regard, we're looking at cutting and polishing. These rare high-value diamonds form a relatively small percentage of our total production. And by taking those diamonds through a cutting and polishing initiatives or partnerships, one can accrete much higher value. We take a lot of risk in diamond mining, so therefore we should try and attract as much revenue back to us as we can, even if it is from beyond the rough mine gate. We have explored a number of opportunities, partnered manufacturing opportunities with contracted buyers who will see us bring additional margin back once they have cut and polished those diamonds. We will share in the percentages of those margins. We will also see a number of diamonds that are going through the own cutting and polishing initiative, where we will see our own projects cutting those diamonds, such as the 46 carat pink that is in Antwerp right now. So we have delivered first diamonds to that initiative. We have started our cutting and polishing strategy, and we look forward to bringing you the results of that strategy in the not too distant future. Clock has long since ticked to zero, so I will end as I began. The board and management team have built a rare diamond company. We're a miner of ethically sourced, high-value diamonds from 2 operations in Africa. We're actively growing our production and the value of our diamonds, and we are surely taking steps towards finding the source or sources of these magnificent alluvial diamonds at Lulo. We are a very attractive, if not the most attractive diamond story in our space right now, and we are highly leveraged to a recovering diamond sector. So if you want to hear more about us, please visit us at our booth or ask us questions afterwards if it's allowed, but we look forward to seeing you just now. Thank you.